Hello and welcome to Kitco Mining's Investment Trends with me, Paul Harris, in which today we are looking at gold exploration in Canada. Joining me is Tim Clark, CEO of Fury Gold Mines, which trades on the TSX and New York Stock Exchange American market under the ticker FURY. Fury Gold has several gold exploration projects in Canada. Last time we spoke, we focused on an investment into the company from Agnico Eagle Mines to advance exploration at its Committee Bay project in Nunavut. You can click on the link in the notes below to see that video. Today we are talking about another of the company's projects, as Fury has just released a preliminary economic assessment for an open pit and underground mining operation at its Eau Claire deposit in the James Bay region of Quebec. This hosts a measured and indicated resource of 6.4 million tonnes, grading 5.65 grams per tonne gold, containing 1.2 million ounces, with another 512,000 ounces in inferred resources. Tim, welcome back to Kitco.
Hey, Paul. Nice to see you again.
Likewise. A great time to put a PEA out with the gold price marching onwards. Let's have a look at some of those headline numbers in the PEA. Average production of about 76,000 ounces per year of gold over an 11-year mine life at an all-in sustaining cost of $1,140 per ounce. The project will yield an after-tax net present value of 554 million Canadian at a 5% discount rate, with an internal rate of return of 41% and a 2.7-year payback, using a base case $2,400 per ounce gold price. $217 million Canadian of initial capital investment, which gives the project a below average capital efficiency of $198 Canadian per ounce, which is about $144 per ounce. Tim, some pretty good numbers there. Are you happy with the way the PEA came out?
I think it's a very robust PEA for us, and we'll talk about it later. But the PEA is supposed to be able to show what this could be, and I think from my conversations with investors over the last year, they really wanted to see a pathway for the Eau Claire project, and it was time to put a PEA out here. It's ready for development if we want to push it that direction. This PA is also going to help us get through some of those decisions. But as far as the PA is concerned, we did use $2,400 gold, but in the financial part of it. But investors should take a pause and take a look at the other numbers we use for the resource, and the engineering is $1,900 and $2,000. So there's a lot of potential upside. 76,000 ounces a year in production is what we point to here, but we wanted to leave it open because if we were able to use a higher gold price, we a lot more ounces will report to that production line. So there's still a lot of opportunity for this asset to keep performing.
Well, the market seems to be responding well. As we're recording this, your share price is up 10% this morning. Let's look at the gold price aspect there, because in an environment when the gold price is increasing rapidly, what's your thought process when determining the base case gold price? How do you pin the tail on the donkey of the gold price to adequately show the potential?
We went around. Yeah, we went around and reviewed what all of our competitors were doing, and I'll be honest. I think that I come from a background in the East Coast, which is a little more conservative. On the institutional side, I've got a couple board members. One's from Goldcorp, one's from Agnico, and to be honest, we chose conservative numbers because we like to outperform and not overpromise. And I think this is exactly what this base case suggests. It suggests that this as a standalone is got good opportunity and more realistic. You can also look at the report. I mean, this was an extensive report for PEA on purpose because we want to show a pathway to a pre-feasibility study, and this is already kind of marching down that line. And that's the feedback that we're getting from a lot of the guys we work with who've already taken a look at this.
Okay, let's talk about some of the considerations going into the report. As you mentioned, it's quite extensive. In addition to the base case, you presented two other development scenarios, a toll milling one and a hybrid case. The hybrid case starts with 2 years of toll milling, followed by full standalone operator crushing, milling and processing on site. That lifts the IRR to 53% and reduces payback to 1.5 years. The full toll milling option reduces the initial capital to just 117 million Canadian and increases the IRR to 84% and reduces the payback to 1.2 years. Again, at that conservative $2,400 per ounce gold price. What were you trying to show with these two different other potential development scenarios?
Look, if you're a bull on gold, you should be believing in consolidation. And as we look at the land package around us, I mean, it's a pretty obvious scenario that there is the Eleanor mill north of us, about 50 kilometers. There's a road, there's power, line that we can get up there even faster. I have not spoken to the new group, Dilmar, that owns it. They may not have any interest in wanting to do toll milling with us, but we know that Goldcorp has already tested the chemistry. It works, and there's an opportunity there financially to add a lot more profitability to our Eau Claire mine. The reality is it's too early to know, but the PEA is designed to show what could be there. So we chose the base case as a standalone. We can operate that, and we know we've had other investors and producers come and look at the mine. They think the exploration upside is there to get to that 3 million ounces at some point. But right now we haven't done all the drilling we need to do to pull all of it in or make new discoveries. But again, we wanted to show that the asset's worth a lot more than we were getting credit for in the share price. And we wanted to show investors a pathway that we think we can get to production.
I want to talk about the exploration upside and the PFS, and I'm probably going to go about this the wrong way, Tim, but you mentioned sort of looking ahead to a PFS. Which one of these options are you going to take forward to a PFS? Or are you going to take various of them forward, or is it still too early to say that?
It all depends on discussions with other parties I think that if I were, other investors out there or other producing companies that nearby, they should take a look at it. But at the very least, there's some low hanging fruit in adding continuity. We have quite a bit, reporting to the resource right now. But if we were to do minimal drilling, we could add a lot more. The Hinge was a recent sort of discovery that we've been working on, but that's not even included in this because the drilling wasn't tight enough. We had stepped out to show that the asset got bigger, and now we got to go back in and kind of pull it into the resource. So this PA gives my board a lot more visibility on where we think the opportunity to add more value is here. So this serves a lot of purposes, and it should give, again, investors a lot of choices that they can take a swing on. If they want to look at this as a base case scenario, there's a valuation. But if they think that consolidation is coming and that other parties will be interested, there's, again, potential for 84% IRR just on existing estimates.
Okay, now you used a reference gold price of $2,400 per ounce. We're about, let's say, 50% higher than that now in terms of spot price. That 2,400, the base case gold price you used gave about, let's say, 2 million ounces across all categories. At spot prices, how much gold do you already have?
Well, look, if we were to use 2,400 on our engineering and our mineral resource, the production would go up quite a bit, I think. And again, we built this PEA to be tight, and I think it's probably comparably tighter than many of our competition. And it was designed because we really want to kind of bring this forward and take it seriously about bringing this to production. If you want to put $3,000 gold into this, I mean, you can make an argument there's $1 billion as a net present value on some of these cases, or close to it. So we put a sensitivity analysis in the report. Investors can easily put those assessments in there and look for themselves. But I mean, what it says to me is, there's a lot of potential here. I think what's also interesting too is it's getting harder and harder to find these 5 and 10 million ounce resources. I think a lot of companies are starting to look downstream. We've got Beaver Creek coming up next week. Half of our meetings are with producers, and they're interested in these smaller, higher performing assets. I mean, if you compare what our Eau Claire is, it's really high grade. There's not a lot of high grade around, and furthermore, the infrastructure is phenomenal. Again, a lot of producers don't really understand what's going on in James Bay. James Bay has been an area of sort of later discovery, but they've got this infrastructure now from the James Bay Hydro Project, and I think a lot of investors underestimate how important it is for producers. And we had one producer come up this summer. The only thing that they were worried about was what's the underlying road access and power structure. And they had a group drive up 13 hours from Montreal just to review the whole highway system and whatnot. And we answered that question in spades. So you combine high grade with good infrastructure, potential for more exploration, low capex initially, because it creates a really nice scenario for opportunity for a real successful mine.
I think you're making a very important point there, Tim. It's one I'd like to dig into more. Up until relatively recently, I think people would say, you need a minimum of 5 million ounces and the potential for 100,000 ounces a year of production. But I think you've touched on a very good point there of, smaller, higher performing assets. It does seem that the pendulum is now swinging to that towards, how much money can we make? Can we make a lot of it? That is perhaps a primacy over 100,000 ounces a year or just a fixed figure there. And it seems your Eau Claire is very well positioned from that point of view.
Oh, I think, we had one group come in and say basically there's no more 2 million ounces near surface in Australia. And the only place they're looking now is Canada, because the jurisdiction's good, the pricing is good. And we hold up extremely well. And again, what we did over the last 3 or 4 years was remodel and this resource. There's a lot of exploration left up there. I went out on some of these 4-wheelers, and we were a half a kilometer away on outcropping, and no drilling had occurred between that and the resource. There's potential for more here, and these things can go a lot deeper. This is not actually a really deep mine. So we're excited by that, and it's open in every direction. We just have to justify with this market raising money and putting more into it, and I think it's going to be a cumulative effect. And I feel like this market's starting to respond to good news with companies like ours. We put the PEA out yesterday. It was up 8 or 9% on the first day. That didn't happen a year ago. So investors should be encouraged that they're going to get rewarded with upside and with bringing companies to production, new drill results, exploration. It's a better place to be than we were even 6 months ago.
Absolutely. A year ago, putting out a PEA would have been a selling event, wouldn't it? Now, you've mentioned a few times about the exploration potential that's still there at Eau Claire. What are your next steps to continue growing the resource? Where do you think you can get the resource to? And how much drilling and money do you think that will take to get there?
Well, I think, I've looked at some of these other companies that are quoting, $50 million on their getting to full feasibility. A lot more of our resource actually is reporting into the PEA. So we've done a lot of tight drilling, but there's some extra ounces in there. We've got over 700,000 ounces that don't report. So we can bring some of those hot pockets, like the Hinge I mentioned earlier, out to the west, into that fold, that resource that could buff up, production going forward. And at the same time, I think that's really what we want to focus on. there's another 15 or 16 different anomalies across the property. We own 30 kilometers of the Kennard Deformation Zone that runs for 100 kilometers. All of our discoveries and hot sort of targets are within a kilometer of that zone. So there's more exploration. And when we sit down with some of these producers, they love what we're doing at Eau Claire, but they said, if you can find another Eau Claire on your property, which is possible, boy, that gets even more exciting. But look, we wanted to start somewhere and show that we can monetize this asset, shows that it pays really well. We've known that for a while ourselves, but now we're starting to get recognition for it. And again, this is in response to what investors are asking for. They want to see a pathway to production. And I think in 3 to 5 years, if we could start today, we would be able to push that needle pretty quickly.
Okay, so in terms of the exploration, what's the plan going forward?
The plan, look, we haven't decided the plan today. We just put the PEA out. So I think the market's going to, and one of the things I've always said is the market kind of designs your plan. If they're going to give you cash to go out and explore, that's what you do. I don't want to be diluting this company and raising it at a sub value that I think we could be raising money at. And what we're doing is we're waiting for the results to come out of Sakami, which is to the northwest of us. Is a property we acquired from Quebec Precious Metals in January. We had a good drilling program going on. We just finished. We put out one result on it so far, and it looked good. We've got more coming behind that. Plus, I think everybody on the retail side, at least, is waiting for that first Committee Bay hole to come out. We hadn't drilled up there in 4 years. We got Agnico to come in and support the drilling program. They also helped us place fuel up there this year for next year to have even a bigger program. So if we were able to hit and get some good drill results out of Committee Bay and keep our stock price moving, then it would change how we do the program for the fall. But what we'd like to do is get back to Eau Claire, get some of that continuity drilling done, make it bigger, which is the producers that are coming into our property are telling us keep making it bigger, and their interest is growing. And so that's how you build a business, and that's basically the plan. And so, but we'd like to be drilling more this year than last year. We'd like to be going back up to Committee Bay with a bigger program next summer, and we haven't even seen the results yet.
So it sounds like you can have a lot of things to discuss and mull over when you're strategic planning later this year and setting budgets for next year.
Right.
How much money do you think you'd look to raise for next year?
Well, again, we're lucky because we've got the Dolly Varden piece, and Dolly Varden has been doing extremely well. Our equity value is around $55 or $60 million. So right there, we've got more than enough to get to full feasibility if we wanted to. The idea would be to leverage some flow-through money in Canada, which you get at a tax benefit. We also have other partners that would come in and support that, like Agnico, for example. And so we got to see what they want to do. But the general sense here is we're kind of hitting on all cylinders. We've laid the groundwork for 3 years. We've brought the resource update on Eau Claire. We put the PEA out on Eau Claire. We got some good, easy targets for not a lot of money. We think we can add more value to Eau Claire. We've gotten producer interest in Eau Claire from multiple parties. And we got a great partner with Agnico, probably the best one we could ask for, especially up in Nunavut, backing us on our project up there, which is a 300-kilometer greenstone belt. So from an investor point of view, you get an asset that's potentially moving into development in Quebec, and you've got the best backer of anything you would want to do in the Arctic with Agnico on a 300-kilometer greenstone belt that's relatively underexplored. So we're pretty excited. And then we've got some other properties. Like I mentioned, we picked up Quebec Precious Metals. With it came a rare earth project called Kippawa. It had zero value, but we don't think that's the case. We've sat down with the local communities and First Nations, and we think we could kind of get that thing up and running, and that's worth some money. We also have properties next to the Eleanor mine called the Eleanor South that's worth money, and we should be able to hopefully monetize at some point. And then we're excited with the drill program coming out of not Kippawa, but Sakami, just northwest of Eleanor, and you'll see those results in coming days.
Okay. I want to touch again on the sort of James Bay region. You mentioned about the hydro that's been developed there. The Quebec government seems to have a development priority on the James Bay region. I believe that's part of the Plan Nord program and can get access to funding and things of that nature. There's obviously a lot of lithium exploration in the region as well. What is the sort of can you give us a bit more information about the sort of broader development aims in the James Bay region of the provincial government and how potentially you could fit in with that?
Well, look, the James Bay Hydro Project basically provides electricity for all of Quebec and most of New England in the U.S. It's I think the second largest hydro project in the world. When you drive up there, you can't believe the road systems. I mean, you're driving down highway, grade level areas in the middle of the wilderness, and it wasn't there 30 years ago. So it's pretty awesome, and I think it's something that a lot of producers just aren't aware of, the fact that the access is there and the discovery is there. So there's a lot of lithium names that have popped up in Quebec, and Quebec is probably, outside Australia, the best place to go if you're a mining company. They make things easy in terms of getting permits. They make things easy in terms of getting money and funding from flow through money and other groups that actually support the mining industry in Quebec. And that's primarily why we focused on Quebec. We had the asset of Homestake Ridge, which we sold to Dolly Varden. We had the Committee Bay, which we put on sort of care and maintenance for a couple of years. And our focus was on Quebec because the government is so supportive. And the infrastructure is fabulous. And I remember when I brought my chairman in for the first time, he had spent 10 years working at Agnico, and he had his camera out at the airport. He couldn't believe that the airport was so nice. It's about a 45-minute to an hour drive. And then we were driving down the road. He wanted to take pictures of the highway because it was so accessible. And you could literally pull a 18-wheeler right up to our property line. There's a metal gate you got to go through to get over the spillway, and the spillway is enormous. And you wouldn't want to fall off the downward side. You never come back. And that kind of infrastructure, he said, was just he hadn't seen before in a junior company. And then when you go up to Committee Bay, a lot of money was Committee Bay. A lot of money was put up there too. We have a 100-person camp up there. We got a actual runway. We got hangars full of millions of dollars in big construction equipment. We got 3 drills that we've owned for some time. And it keeps our costs low relative to everybody else. I think traditionally we've drilled up there for $650 a meter. I think it was up a little bit more than that this year to about $850 because we only use one drill. But we can keep our costs much lower, almost half of what some of our junior peers can do in there. And the same is true for Quebec. When you have good infrastructure, costs go down.
Excellent. Now, a lot going on, Tim. So let's just end with a recap of what you think are going to be some of the key catalysts for the company over the next 6 to 12 months that our viewers can look forward to.
Sure. Immediately we're going to have drill results coming soon, and on both the big projects we've been working on this summer, which were Sakami in Quebec and Committee Bay up in Nunavut. And over the next, I would think 30 to 60 days, a lot of those lab results will come back. They'll tell us a lot. My guess is Committee Bay is kind of on its own pathway right now. And we clearly need to go back and keep pursuing the opportunity there. It's a big swing. Gold price is at $3,500, which is telling you should lean into projects like that because the big guys would want those projects to come forth. On Eau Claire itself, we'd like to get back and do some more continuity drilling and and making sure that we can get the most bang for the buck. I think it would be low-hanging fruit to do some of that drilling because it would add a lot to the PFS as we push forward with that. And we've also got, again, so the goal here would be to bring a partner in on that potentially. But we'll see. We'll see what pricing is. I think that Beaver Creek will give us an idea of where investors and producers are, and we'll find out that news next week. We've got a full set of meetings for the week, and it's the highlight of the year for the junior companies. And gold couldn't be in a better position. So those are the keys that I think for us.
Absolutely. I will be there for Kitco Mining. Looking forward to seeing you there. Congratulations on the Eau Claire PEA once again, Tim. And that's it for this episode of Investment Trends. Once again, Fury Gold Mines trades on the TSX and New York Stock Exchange American market under the ticker FURY. Tim Clark, many thanks for joining us today.
Thanks, Paul. Good to see you again.
And of course, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.